Today, we're doing something a little different. We're going to break down an operation that was so fast, so precise, and so successful it honestly feels more like a script for a digital heist than a financial report. We're going to dissect one single trading session, executed perfectly from start to finish. So let's crack open the playbook and see exactly how they pulled it off. So what if you could have a textbook perfect trading day? I mean, everything just goes right. But not over a few hours or even 30 minutes, but in less time than it takes to brew a cup of coffee. That is the heart of what we're looking at today, a session where every single move was a winner. All right, let's start with the first number. It's kind of hard to believe. This is the total amount of time the entire trading system was actually exposed to market risk. Just about 3 minutes. That's it. In, out, and the job was done. And if the speed wasn't impressive enough for you, check this out. The win rate, 100%. Every single trade that was put on during that 3-minute window was closed for profit. A perfect score. So this is the big question, right? How on earth was this possible? Was it just a crazy stroke of luck? Some market fluke? Or was it the result of a meticulously planned strategy, just waiting for the perfect signal to strike? Well, let's dig in and find out. You know, every great plan, every great heist, it all starts with a signal. That one go moment that sets everything in motion. For this trade, that signal came from a key indicator in the market that measures one thing above all else: fear. And that indicator is the VIX, which you've probably heard called the fear index. Just think of it like the market's collective heartbeat. When the VIX is high, traders are anxious. They're expecting some wild swings. But a low VIX, that signals calm confidence. And it was a very specific, very dramatic move in this index that triggered the whole shebang. And this was it. The VIX didn't just drift lower, it collapsed below the critical level of 15. The source material calls this the green light for explosive convexity. And all that really means is it's the moment where potential profits don't just add up, they can accelerate almost exponentially. This was the all-clear signal that conditions were absolutely perfect for a very aggressive play. This collapse in the VIX triggered what's known as a fragility flip. You can almost imagine the market's entire personality changing in an instant. It went from being nervous and fragile, where any little piece of bad news could cause a panic, to a risk-on environment, where traders were suddenly eager to buy aggressively. The fear was gone, and greed was taking the wheel. And this brings us to the name of the playbook itself: dynamic convexity. If you think of convexity as a kind of profit accelerator, like a rocket hitting its second stage, then this strategy is all about hitting the gas at the exact moment the market flips to capture those supercharged accelerating gains. Okay, so the plan was set. The green light was on. Now it was time for the crew to get to work. But this wasn't a team of people huddled in a room. Nope, this was a synchronized suite of highly specialized proprietary trading systems, and each one had a very specific job to do. So let's meet the crew. First up, you have Alpha Core. Think of it as the strategist. Its job was to validate that the dynamic convexity playbook was the right call for the conditions. Next, you have DOTAS, the spotter. It scanned the environment and gave the final confirmation. Yep, we are officially risk on. And finally, you have OMNI-Profit Nexus, the closer. This system is the one that actually executed the trades with just ruthless precision to lock in the profits. A perfectly aligned digital team. The green light was given, the crew was assembled. The time was 9:30 a.m. on the morning of the trade. The market opened and the systems engaged. Here's a blow-by-blow of how this incredible 3-minute operation went down. I mean, the speed here is just incredible. At 9:30 a.m. sharp, the systems go live. Just 15 seconds later, bam! Trades on Tesla and Bitcoin options are executed at the exact same time. Zero hesitation. For about 2 minutes, they just ride the momentum wave. And then, by 9:32 and 30 seconds, it's over. All positions are closed out, profits are locked in. By 9:33, the systems are completely disengaged. Now, this is so important. These entries weren't random guesses. The systems were programmed to strike only when the assets, in this case Tesla and a Bitcoin proxy, hit very specific technical price levels. They waited for that perfect moment, these high probability zones, like around $340 for Tesla, to make sure they got an immediate move in their favor. So, the operation was a huge success. But what did the haul actually look like? And maybe more importantly, What was the key principle that guaranteed a clean getaway? The thing that allowed the system to keep its winnings without giving any of it back to the market. Here it is, the breakdown of the loot. 3 trades, all winners. A Tesla momentum play that gained over 9%. The Bitcoin trade, which was identified as the leadership move, jumped almost 12%. And a second Tesla breakout trade added nearly 9% on top of that. All in all, the total haul was a nearly 10% average gain across all the positions. And this right here, this sums up the entire operation in a nutshell. An almost 10% gain with only 3 minutes of market exposure. That is the absolute definition of efficiency. It proves that core idea of these quick, surgical trades. You don't need to be in the market for a long time if your timing is perfect. But here's the secret to that clean getaway. This was an aggressive play, for sure, but it wasn't reckless, not even close. Even during this perfect storm of opportunity, the system's own risk rules capped its exposure at only 20% of its available capital. That means the vast majority, 80%, was held safely in reserve. Risk discipline, that was the real, unseen hero of the day. Okay, so, a perfect score, a huge gain in minutes, flawless execution. It's so easy to look at this and think, I've cracked the code, right? But the post-session analysis delivered a really critical warning about the biggest danger that comes from a victory this clean. The analysis after the trade was blunt. It basically said, look, a 100% win rate is just not something you can expect to repeat. It's an anomaly. And believing that it's the new normal leads directly to overconfidence, which is probably the #1 killer of any trading strategy. So the real lesson from this perfect day wasn't about celebration. It was about caution. The analysis was crystal clear. Don't treat an anomaly as the new normal. Don't let success make you complacent. And never ever let one incredible win convince you to get reckless on the next one. You gotta stick to the playbook. Which really leaves us with this one final thought. This whole thing was a masterclass in strategy and execution, no doubt. But the most valuable lesson might be a psychological one. When everything goes perfectly, is the biggest risk you face simply believing that it always will? It's a crucial question for any system, or really any person, that's aiming for success over the long haul.